All right, everyone, let's get started. In this lesson, we're going to talk about structure and liquidity, structure in an advanced and sophisticated way. How do we work with structure in an advanced way? We work with trading ranges, so we need to carefully validate a top as a strong top or a bottom as a strong bottom in order to properly establish the beginning of a trading range. So let's review the basic structure here. This was the structure I initially showed you, so you could understand how the market moves. That the market moves in an impulsive way and in a corrective way, in an impulsive way and in a corrective way. Every break of structure, when it happens in a sequence, as shown here in the image, characterizes what we call a boss. We know that here we have a continuation of an uptrend, so consecutive breaks. We know this is a boss, and we know that from the moment the price breaks the last low, since we are in a bullish structure, we know that from the moment the price breaks the last low, we have a change of character to start a bearish flow. So this is essentially the fundamental structure that we are working with here. Here we have a basic structure in front of us. We're going to carefully review it because for you to fully understand the advanced part, we need to go over it again. So here's the thing, in this particular case, if we take into consideration what is known as traditional SMC, the most basic form of SMC, the SMC that's taught by many people on the internet, many people who honestly don't really understand liquidity concepts, they really don't. What they actually know is price action, so I wouldn't even call it technical analysis. It's really just price action, plain and simple. They don't understand much about liquidity, so that's why they teach it incorrectly. What do they teach? They teach that every time the price breaks structure, it leaves us with a POI. And that's true, the price really does leave us with a POI. With every structure break that happens, the price leaves a POI. However, this does not necessarily mean that every single time the price breaks a structure, we should immediately trade that particular POI or point of interest. And that is exactly why many times, or actually in most cases, or to be more precise, the majority of the time, people are unable to be consistently profitable even when trading SMC, which stands for Smart Money Concepts. Because if someone chooses to trade in this way, they will end up seeing a large number of potential opportunities, but unfortunately, their accuracy will be quite poor. This is due to the fact that, in reality, many of these lows, these so-called SPOIs or secondary points of interest, which are marked in red here, are actually just liquidity rather than genuine trading opportunities. So let us proceed so that you can gain a deeper understanding of how this type of analysis works in a much more advanced and sophisticated way. So every single time the price breaks through structure without sweeping liquidity, the low is liquidity. So in this particular case right here, the price made this break and this low point had not swept the previous liquidity. Therefore, this low is considered liquidity. In the same way, a similar thing happened here as well. It happened here. Yes, it truly happened at this very spot. It happened at the moment of shock right here where we are now. It happened here in this exact place. So, how does the structure work in a correct reading? What is the way the structure functions when everything is interpreted as it should be? The price starts the flow, right? So it breaks the structure, okay? It makes a boss, and from the moment it makes this boss, this low hasn't swept any liquidity. So the price comes and sweeps the liquidity from this low, okay? And breaks the structure. So within this context, we had a boss, okay? Where I choose not to trade simply because the price made a break where the low is actually fake. It's simply a liquidity low, nothing more. So the price comes to sweep this liquidity. After this liquidity sweep, the price breaks the structure. So it breaks a real structure. So this structure I can already trade. So why is that? Because here I have a protected low. Why is this low protected? Because the price swept liquidity and broke structure. So in this context, I wait for the price to generate internal liquidity, sweep this liquidity, and mitigate the POE. And then you should continue the movement, okay? But let's go back to the drawing here in the lesson for a moment. The price comes, makes the pullback, which is a pullback, meaning the price temporarily moves against the trend before continuing and then continues. Here, the price generated another trading range, okay? A trading range is a period where the price moves sideways, showing a balance between buyers and sellers. This is important to notice as it can signal a pause before the next move. Look, the price made this boss where this low is liquidity because it didn't sweep liquidity. But here, at this particular point, the price actually broke again, just as it did before. It left us with this liquidity low where the liquidity was swept. And here the range was formed. You must be wondering why in this X where I put X here, it's not a change of character. Exactly because this low is a weak low, it's a liquidity low. So a real change of character, a true change of character, only happens when the price breaks a strong low or a strong high. And a strong low is exactly what I just explained to you. A strong low is always when the price sweeps liquidity from the lows and breaks the bullish structure. And a strong high is the opposite of that. It's when the price sweeps liquidity from the highs and breaks the low. The purpose of this strong low is to sustain the bullish structure. However, when this strong low is no longer able to sustain the bullish structure and eventually gets broken, that's when we see a change of character. That's right, in this particular scenario right here, we would have a change of character, a noticeable shift. After this shift, that downward movement I mentioned to you begins. I mentioned this earlier, but in this scenario here, I've already marked out for you what the trading range would look like in practice. The price would change character and start a bearish flow. So the price made a new boss here. Wow, that was unexpected. I did not see that coming. Now, at this very moment, right now, a boss has formed right here. It has swept up the internal liquidity. It has broken the structure, confirming for us that this top is a strong top. So here I have a trading range. So generally in these ranges, I draw my Fibonacci and identify where my hot zone is. And that's where I'm going to look for my short trades. So the price tends to mitigate my optimal zone, continue the movement, and so on, maintaining this flow. When the price changes character, breaks a strong top, then I'll have my change of character to the bullish side. But if the price only manages to break through a weak high, like this one, a high that generally isn't considered strong, it's just a liquidity sweep. So we don't trade this kind of break. We only trade breaks when the price really breaks a strong high or a strong low. For us to trade these ranges and avoid getting into this kind of entry, let's go. In this scenario here, since the price swept liquidity and broke the structure, we would have had a zone here to take a buy. We could have taken a buy in this region. And in this context, in this case, you can see that it would have failed. So how do we avoid falling into this kind of trap? We need the price to generate liquidity. So the price has to generate liquidity. It can be in the form of accumulation, chart patterns, or structural liquidity. What is structural liquidity? This here is structural liquidity. This here is structural liquidity. Here is structural liquidity. How do I identify this liquidity, Robert? You identify it as follows. Every time the price made a structure break, remember this. Every time the price breaks structure without sweeping liquidity, it is liquidity. For that, obviously, you need context. Let's describe here how I could take a trade. I really like this type of setup here. The price sweeps, the liquidity breaks the structure. This right here is what we are talking about. A structure break, it can be. It will depend on the specific context. But there will be situations where it will be a boss or a chalk. That doesn't really matter because I genuinely like this particular type of setup where the price action does exactly what it is doing here. It creates this kind of break, and then it forms another break, and then it forms this boss, which stands for break of structure. Everyone knows that this boss at this point is actually a fake boss, just like the previous one where the price did not sweep liquidity, it simply broke the structure. So why is there still liquidity sitting below this low? Because retail traders consider that every structure break, the last low or high, is a strong support. In their view, it's a strong support. So they buy in this region and place their stop loss below it. Many times they consider it a pivot, so our trading approach is based on institutional reading, which is why we can read the traces that institutions leave, the traps that institutions set, and retail traders end up falling into these traps, often due to anxiety, strategy, or emotions. So this type of setup is one I really like to trade, where the price creates this trap. Retail traders place their stop loss below this low that they believe to be a protected low. The price comes down, mitigates the watch zone, and that's how I would take my position. Either I extend it or I place it at the last high before the pullback movement. The price comes, sweeps the internal liquidity, and mitigates the OTT zone or my POI. The POI can be an order block, a BPR. I really like my OTT zone, the proprietary volume. So we have to pay attention to this type of range and also to the market bias. But this is just one lesson. The first lesson that I will be sharing with you, so there will be more lessons coming. After this lesson, a lot of questions will come up, so I'm available to answer your questions. And that's it, folks. Let's go for it.